All right, gentlemen, just stay on. We need to address another bit of information. Zensar Technologies came out with their numbers yesterday. It looked like a disappointing quarter because the dollar revenues were down about 1.4% and the EBITDA, or the margins as well, have come in at 15% versus 15.7% last quarter. So let's find out more from the management. Ganesh Natarajan, the Vice Chairman and CEO of Zensar, joins us now to talk about that. Mr. Natarajan, good morning and thanks for joining us. Happy New Year to you. Can you first start off by telling us what the reason for the weakness is in terms of your dollar revenues? Was there any challenges apart from the usual, seasonality, furloughs, etc.?
Yeah, absolutely. We had 2 or 3 challenges which has resulted in the sequential decline. One was, of course, as you rightly said, the furloughs, which always creates a problem. And that contributed to almost 2.5 million of less revenues and profits. The second, of course, we had 2 large projects in the previous quarter, which actually resulted in a big bump in the last quarter, which completed. And that order pipeline has now been filled and we are moving forward. The good news, of course, is that our digital growth has been spectacular. In fact, if you look at the digital growth over last year, it's been almost 17%. The profits have almost doubled. And I would think that if you look at our year-to-date revenues, 9 months, that's been growing at close to 13%. We've had a good growth in terms of profits of almost 23.9%. So given all those parameters, I really don't see any concerns. And I'm, as I said, particularly excited about digital e-commerce. And going forward, I think that's going to be spectacular for Zensar.
Okay, there were no Chennai-related problems. You all don't have an office there?
Fortunately not, if I may say so. But no, there were no other issues except for seasonality and the enterprise business being slower this quarter.
Okay. Will the enterprise business slowness persist? How much of this quarter's weakness should we read into the current quarter and the next?
Well, I don't think you can see any problem at all, Lata, because we are looking at a good pipeline. In fact, the pipeline is the strongest we've ever seen. It's over 500 million. For the first time, we've seen a pipeline that big. And the good news is that close to 20% of that is digitally enabled. And as I said, our e-commerce business is really tracking well. So I don't see any real problems this quarter. We'll be back on track. As I said, normally it's a seasonal quarter combined with some project slowdowns that's really affected this quarter.
Okay, so your Q3 digital business has grown at 17%, like you said. And I think year to date, it contributes about 26% to your overall revenues. So can you give us a sense of how much the growth could be for the rest of the year?
See, it's difficult to predict exactly, but we will hit a 30% of business from digital over the next 2 quarters. There's no doubt about that. And what is really delighting for us is that, the digital used to be these sporadic small businesses, but now we're seeing deals of over $10 million in size. We're executing one of those. We're also seeing a lot of the digital clients moving towards maintenance and enhancements, which again is a fairly large deal we signed last quarter. So given these two, the trends are more of transformational digital from what used to be more of incremental or mobility and e-commerce. So given that, I think that's a great trend. And being early movers in digital, we've been working on this for almost 3-4 years. I think you're now seeing the results of digital being mainstream in our business today.
So can we believe that your annual run rate will be for revenues 15%, 13%, as the 9 months are indicating? Will your earnings be 23-24%?
I think you'll certainly see. I mean, as I mentioned, if you look at the 9 months and you have a 12.6% revenue increase and a 23.9% profit, I think that trend should continue. There's no reason why we should do worse in the last quarter. But as you know, we don't really give formal guidance. But I'm pretty comfortable that this year will end up as a good year. And given the pipeline, I think the next few years should be very good and obviously powered by digital and e-commerce.
You did speak about the deal wins, but the revenues from your top 5 clients have declined about 7% on a quarter-on-quarter basis. Are you facing any kind of stress because of competition from some of your top clients?
The biggest furloughs are from the top clients. So given that, I mean, it's pretty predictable that will decline. But not at all. In fact, our top clients are doing much better this year than they were last year. Last year, we had a slower growth in top clients. So I don't see any reason to have any concerns at all about our top clients. And the good news is that our deal wins, if you look at the big deals we signed last quarter, it's in all the 3 geographies that we are focusing on, US, Europe, as well as Africa. So at this point of time, I really don't see an issue at all.
All right, Mr. Natarajan, pleasure speaking with you and thank you for introducing a note of optimism. There's a bit of pessimism in the stock markets as we speak with our chartists. Thank you very much for joining us. Okay, let's get back to our chart experts.